Hi everyone, Matt Sharp here and welcome to the Traders Resource Centre Forex Classroom. This is going to be a series of videos where we're going to look at critical aspects of trading, and we'll run through some lessons to try and help. Today we are looking at what are the most two important aspects of trading. Is it a system to trade with? Maybe many of you would think it's having the latest indicators that will help you trade. Having the right broker is certainly one aspect of trading successfully, but all of those sort of answers are in fact wrong. There are really only two features about your trading you have to get right. The first one is entries. You have to enter trades at the correct time, at the correct price, and obviously in the correct direction. The second one, once you've entered the trade, is, and this is probably even more important, in fact almost certainly is more important than the first one, is trade management. What do you do with your trade once you're in that trade? That is going to determine whether your entries are successful. Entries on their own are nothing. They just mean nothing, because you could enter any market at any price in any direction, and if you've got the correct trade management, you can in fact make profits, very small profits, but you can make completely random entries into a successful trading system. And yet you can turn very good entry strategies into a losing system if you have the wrong trade management associated with those entries. Now I'm going to keep this very brief in this lesson, because I actually held a webinar which I'm going to give you details of in a minute. It's completely free, for about a 30-minute webinar which explains this in a much more detail. As I'm sure you're aware, there are hundreds of ways of deciding on what your trade entry criteria is going to be. For most people, it's going to be having a trading chart with some indicators on down the bottom here, and they're going to wait for some of these indicators to do something and one of them to do something else. Once they've got that happen, then they'll look to get into a trade. Typically that is a trade entry. Now these may be trade entries looking for maybe reversals in price action. It may be continuation of trends, breaks of previous highs and lows and things like that. It can be anything, and I could spend hours and hours talking about that. But as I say, that's all covered in the webinar, which I'll give you details to in a moment. The point is that no matter what your trade entries, you have to then marry your trade management to your entries. It would be pointless having, for instance, a trade entry system which is very low risk, which looks for reversals like we have here. Price has been down, up and down and up. You're looking for this top. You find some indicators and price action and that sort of thing that gets you in at tops with very low risk. Maybe typically on a 5-minute chart, you're looking for, maybe you've got an 8 pip risk, generally speaking, on the trade. Well, it would be pointless applying a trending trade management system to that trade. Probably the best sort of trade management system for that sort of trade would be one where you look to take a certain percentage of the initial risk. Maybe you look to take 1-to-1, so you look for 8 pips profit. Maybe you use price action, and maybe you look for price to get to previous lows and things like that. But the point is that you need to test. You need to do this. And the reason you need to test is because you need to find not only a trade management system that, in quotes, works, and by that I mean generates a profit, but also does it in a way that fits with your psychology. Because you may be the type of person who needs to feel right most of the time, in which case you need to have a trade management system that produces maybe 65 to 70% winning trades. There will be other people, and that might generate a profit of over 100 trades, maybe that generates profits of, and I'm going to talk in terms of expectancy, which is explained in the webinar, of 30%. There might be other people who are quite happy to work with winners only in the 30 or 40% area, so more trades lose than win, yet gives better profits. In fact, gives you maybe 40% expectancy per trade. You need to take into account your own psychology as well as the maths. Now, if this is all sounding a bit complicated, don't worry, let's take you to the webinar. As I say, it's completely free, and I can explain this in a lot more detail that you will be able to understand. So all you need to do, as it says here, is click below to access the free webinar. There's a link in the description, right at the top of the description. Simply click on that link and you'll be taken straight to the free webinar. I look forward to meeting you there and to discussing with you trade entries and trade management. Thanks for your time.